Good morning, everyone, and welcome to the PivotBoss pre-market video for Friday, April 5th, 2024. I am Frank Ochoa, aka PivotBoss. Happy Friday, everyone. Here's a look at the daily time frame of the ES. You'll notice right here the ES had a tremendous sell-off in the previous session. Prices above the previous session's high were trapped here, and we saw a tremendous meltdown late in the session here. Leading to an outside day down and a super high range day. A high range day well over 200% of ADR, which can be a sign that much more volatility is likely coming. And when you have high range volatility, that usually means selling pressure and a pullback of some nature. Right now, this market is holding right at the previous month's midpoint. That's a key level right there that, if broken, opens the door to the previous month's low. That's going to be right around that 50-55 zone. You have a rising year-to-date VWAP that comes in to intersect. That could provide a little bit of a landing point here for this market if that level is crossed. Now, we just had NFP report come out, 303K versus a 212 estimate. The previous month revised downward to 270K. So again, this market right now showing some initial reaction to that number and other numbers here, and we're seeing an initial push down followed by a bounce. But given the intense amount of selling pressure we saw in the previous session here, any morning strength could be seen as a selling opportunity. We could be looking at an additional day of weakness up ahead. Again, keep an eye on the previous month's midpoint of failure there, and you start to really work your way down. We're looking at a range that could easily be 50 to 60 points of range by the end of the day if that level is broken. Now, if it can hold the mid or hold the previous month's mid, maybe there's a little bit of a fade back day today, but again, given the intense selling pressure in the previous session, we could see additional weakness up ahead. Any pullback, even as deep as that FOMC key level, could still provide an opportunity for bears to defend. Now, looking at the NQ, big time weakness in the previous session as well. High range day, major failed new high, outside day down. This is something we talked about in the pre-market video yesterday that could be in play. Had to watch the previous session's high. If there was any type of rejection, we could be looking at a push to the opposite end of the previous day's range. And this also came with a break of the previous month's midpoint. Not only did it break the previous month's midpoint, closing below the 34-period pivot-based EMA, and that can tend to be quite bearish as well. So again, this could be looking at additional weakness down toward the 17.8 level. That's right around the previous month's low. You have a rising year-to-date VWAP, and we could be looking at a move to the midpoint of the previous month's or previous quarter's range as well, 17.5. So this could be quite bearish here for this market, the way that the market reacted in the previous session. Today, any pullback, early morning strength could be seen as a selling opportunity for additional weakness later on in the day. Looking at crude oil. Crude oil had the opposite reaction here. On headline risk that took the market down, crude oil rallied in big fashion. Failed new low, outside day up, big time push to the upside, and nearly reached our 87.50 target yesterday, reaching 87.22. Today, this market right here trading in a narrow range at the highs, still trading just below 87s here. But as we mentioned before, this 9-day narrow range here from the low of the breakout point forecasted a move of about 87.50, and we're still working up toward that target. Nearly got it yesterday here, but this market is gung-ho working toward 90 and 91.5. 91.5 would be the key range 100% target. So this thing is still very, very bullish here. Today, bulls looking to defend into morning weakness for a shot at a checkmark continuation to the upside. Gold futures hung in there yesterday as well, and today showing signs of a failed new low. A bullish failed new low in an uptrending market is highly bullish. So you have a failed new low where prices below the previous session's low are rejected. Whenever you see that in an uptrending market here, it's an opportunity to buy and look for strength ahead. Today could become an outside day up in the best case scenario, and this market already reached the 2316 target that we had from the key range, but we're looking for this market to continue to work higher now toward 2400. Can't stop, won't stop right now for this market until proven otherwise. Even a push back into the 22-25 zone could still be defended until proven otherwise. So very, very bullish market right now. Bulls looking to keep the previous session's low bid if it can. We're looking at perhaps an outside day to the upside here for gold. Looking at the YM, perhaps of all the markets yesterday, the YM had the most significant meltdown. Failed new high here, outside day down, and a stop run day as well. This one was 300% of ADR or so, so it was a massive, massive day here. A range of 883 points, which I believe is the highest range point total of the year. It even bested this day back here, which was 802 points. Now the market was able to bounce back after that day there. It did, but over here this has been a more significant elongated sell-off from the first trading day of the month. It's taken the previous quarter's high and close offered, and when that happens you tend to rotate back to the previous quarter's midpoint, and we are just shy of that level now. So again, this market showing quite a bit of weakness here today. Any pullback, especially in the morning, could be seen as a selling opportunity for a continuation down. But this is going to be important here. If it breaks the previous quarter's mid here, if it starts to push down through yearly VWAP, you really start to open up some downside. How far down do we go? That could open the door to a move that takes us across the previous quarter's range and kind of wipes out the entire yearly gains in that scenario. So that takes us back to about 37,250. The 100% target of this key range as well. Initially we were working our way higher toward 40,900 right up here, but it failed on the higher high. It failed at the key range high yesterday and melting down here. So at the very least we could be looking at the previous month's low, and if it breaks through there, the 100% target takes us right to the previous quarter's low as well. So very bearish here early on after yesterday's massive sell-off. We'll see again, do bears defend into morning weakness? That could lead to additional selling pressure the rest of the day. All right, that is it for now. We'll see how this develops the rest of the session. Happy Friday. Please be sure to like, share, and subscribe, and we'll see you in the trading room. Take care.